everyone, it's Jeb Hamwerger from GoldStockTrades.com coming to you Thursday morning before the market opens. It's been a very exciting year for gold so far. We've seen the stock market in the last fall, the last quarter of last year, correcting. This has put a halt to the interest rate increases from the Fed, and they've held off on interest rates, and they may actually start cutting as the yield curve inverts with the long-term and short bonds. That signals a possible slowdown in the economy, a recession ahead, real estate peaking, and investors are looking for ways to preserve their capital and preserve their wealth investing in gold. This is what I've been expecting for a long time, and that's why I have encouraged for years now patience and fortitude, because the sector will come back. We are not going into cannabis and crypto and all these other things that we don't know can stand the test of time. Gold, precious metals, the mining market, that will come back. And this chart I've been showing you guys for many years. This chart shows three things: gold production annually, exploration spending, which is the yellow line, and the discovery rate, the millions of ounces discovered through all this money that has been made in exploration. So I started in this sector around this time. This is when I was graduating high school. And my dad, who had me late in life, lived during the Great Depression, told me, "Son, go out there and learn gold mining." Back at this time. This is when gold was probably around $250, $300 an ounce. As you can see here, at that time there was a huge drop in the discovery rate, and from 1997, which was the Bre-X scandal, scam in Canada, which was a mining company that was a complete scam that was promoted by all the biggest banks in Canada. It wasn't promoted by little promoters. It was from the biggest banks that fooled the biggest funds, the top funds, and that's caused a decline in exploration spending and bad decline in 99 to 2000 in the junior mining market. And that's when I went to my dad when I was a senior in high school and showed him the charts on gold. Charts for guys that were so beaten down, but now they're famous guys in our sector. But back then, they were unknown, and the mining sector was really under duress. And that's when I started getting interested, and we had that first leg higher, and we began to see exploration spending bottom out in the 2001, 2002. Then the 9/11 happened when I was in college, and that caused the gold price, the war. We've been in perpetual war now, and we've gone into major debt mode, but that caused that first leg higher in the price of gold, and gold doubled and doubled and doubled 3 times. And you can see here the picking up of exploration spending. And that really continued all the way up to 2011, 2012. And it was the most exploration spending ever, right? Much more than in the 90s. Right? Look here in the 90s, the industry was just spending less than $2 billion a year, but look how many ounces of gold they were discovering. Hundreds of millions as ounces of gold. Well, here they were spending almost 4 or 5 times the amount on exploration spending, and look what's happened. Nada. Not much. Really not finding any big deposits. We're barely finding 10 million ounces a year. If we're lucky, 2014 was pathetic. It's down to the record lows of discovery rates. Ladies and gentlemen, please pay attention to this and don't ignore this chart any longer. The gold miners are trying so much to stay alive, and they're producing so much, but they're not discovering anything. Production's at a record high, and it's going to start falling off a cliff in a couple of years. So you better start paying attention to discoveries in the sector. Please start paying attention to gold stock trades. We have always found the best discoveries. Don't listen to people who put us down and try to mislead you away from us. Back in this time, we have found the best discoveries. One of the best discoveries we found, Long Canyon, which we were able to monetize for our subscribers. You can look it up on my blog. Back in 2010-2011, Frontier Gold. Hey, there's going to be losers in the mining business. There's going to be failures. Everyone has them. If you don't take risks, if you don't try to swing, you're going to... Even Babe Ruth, who was one of the best home run hitters of all time, also had strikeouts. If you're going to swing big, you're going to strike out. That's exploration. Don't be discouraged by failures. Take a deep breath. Try again. We're going to be in another cycle again. Don't give up. Look here. Exploration spending has continued to decline. Even when it was high, they couldn't find gold. This is the best time to be in exploration mode right now. Look for companies that are drilling. Look for the top explorers, the top jockeys, the top intellectuals in this business, geological intellectuals, PhDs. Don't give up hope. Maintain your patience and fortitude in this sector. This is Jeb Hanwerger from GoldStockTrades.com. Please sign up for my free newsletter. Follow me on Twitter at GoldStockTrades. A lot of good news, a lot of good companies, a lot of good people trading at pennies per share. But if we get into another cycle, like in the early 2000s, where it picks up again, and production picks up, but look, all this production really is coming from this last cycle. So we need another discovery cycle in order to keep this production up. We are in the right place. Don't be misled. Stay tuned to GoldStockTrades.com. Jeb Hanwerger. Thursday, March 28th, before the market opens. Gold's on the verge of breaking 1,400 an ounce gold and 1,800 Canadian.